the expenses goes, we have covered the main things. Over in expenses, the main thing is the template that you're defining and the items, because against that the employee will be doing the expense booking, will be creating the expense record and submitting it for processing. Okay. And if you look through our previous classes, we have entered the expenses, we have submitted it to for auditing. The auditing person has reviewed the, that is auditing is basically the finance department. They have reviewed the expense and they have approved it for payment. They might reject it or they might approve it. Once they have approved, you move it to the you can transfer from expenses into payables. So we did that, and once it goes into payables, thereafter the rest of the processing is the same. Processing of the invoice or processing of the payment, the process remains exactly the same as we have seen in the payables and
I have a question here.
yeah.
See, in our PeopleSoft, okay, in my company, not I can say, in my company, when expenses are claimed by an employee, okay, especially this is for US employees, not for Indian employees, because India, as per Indian law, we need a hard copy of the bills. Most of the times, I believe they take the hard copy of the bills. But however, in US employees, what they do is they send through an email.
Hmm.
What the way is the as usual in the Fusion, employee apply for this one. What do you call expense? The manager will approve.
Hmm.
Once the manager approves, the printout of the approved copy is taken, because it is a barcode is generated. In fact, that's in customization. Barcode is generated. Then they will send it to an email that will go to an application called image server, image now, which will scans the employee based on barcode and attach it to a respective expense. Is such integration available in Fusion?
Um, in Fusion, you can have that image scanning. You can email, or what you can also do is at the time of submitting the expense, you can attach your expense receipt in soft copy.
This is the without integration you are talking. Hello.
Yeah, the standard feature of the expense, we have attached a image. We
No,
just
you
picked
are
up one image from a desktop.
no, yeah, that you are manually doing that. What I'm saying is, uh, like image when you send an email,
Email link,
yeah,
right?
email, yeah, yeah.
Hmm.
Can an employee
Yes, you
email
can
the
do that here also.
and it will get automatically uploaded?
Yes. Even invoices, the payables invoices, na?
Mm-hmm.
There's a facility for, the supplier, he can email his
Mm-hmm.
image of the invoices. That will go into the image server. From there, it will get scanned and your invoice will get created.
So it comes along with the this feature comes along with the
Yes, it's a
subscription.
standard product.
Product, okay. And so one more thing I wanted to ask you, in terms of Fusion, what do you mean by customization?
System,
Customization.
yeah.
What do you mean by customization? What are it? See, in PeopleSoft, when I say customizations, uh, like I'm changing the code level. Okay. So, for example, I might have written a code to one level approver. Okay. So I'm adding one more level of coding to the delivered code given by Oracle to make it multi-level approval. That is called customization. Here, what do you mean by customization?
First of all, when you talk about PeopleSoft, the PeopleSoft you're talking about is an on-prem application,
Hello.
right?
Hello.
Can you hear me?
Yeah, I can hear you now. Oh, hello.
The that you're you're talking about,
Mm-hmm.
that is an on-prem or is it a cloud?
On premises.
On-premise. Here, the Fusion that we are seeing here is a cloud version.
Correct.
Now, customization, as far as approvals is concerned, you can do 2 levels, 3 levels. That is done through the BPM module.
Yeah.
Okay, so that is really not so much of customization. We call it more around configuration.
Okay.
Okay, now customization here would mean, like you said, adding some piece of code.
Mm-hmm.
Now, because it is a cloud environment, as far as the application is concerned, Oracle has restrictions on you cannot customize anything
Correct.
because it may affect other customers.
Correct.
Okay, so only those customizations that do not affect other customers
Mm-hmm.
are allowed. For example, configuration of the approvals,
Okay.
that is allowed. Creating certain types of reports is
Mm-hmm.
allowed, or integration using the OIC is allowed.
Okay. Those are called as a customization here.
Yes. Or if you want to run a API, you want to have a API call and create records, that is allowed.
Okay.
Now, moment you allow APIs, you are literally
Mm-hmm.
opening up your customization box. You can make
Okay.
calls to all the different APIs that exist,
Okay.
get your configuration steps done.
Okay.
In the earlier versions, what was happening is earlier versions of Fusion, it was more controlled. They did not have even the API. They were not allowing the API calls also.
Okay. But
But
they
slowly they have started based on customer adoption, customer requirements.
okay.
Even the report dropping, you need approvals from Oracle, and Oracle will give you you know the schedule when they can be dropped and when they can be attached and stuff like that.
Okay.
All right. So today we will move forward to the receivables module.
Okay. Expenses done now. Complete.
Yes.
Okay.
Expenses, there's basically nothing much. It's a small module. The important thing, like I was saying, it's one is creating the template, then employee submitting the expenses using those templates, the finance department reviewing, updating, and payment. That's about it. Now, in receivables, the receivable starts when an invoice is generated by the company for their customer. In payables also you have invoices, but that is received from the supplier along with the goods. This time the customer, that is our company, is sending the materials to the customer as per their order. So if you look at the cycle, order to cash cycle, imagine the Amazon or a Flipkart process where we go to their website, we review the products, we add them to the cart, submit it, the cart is processed, the goods are shipped. Moment the goods are shipped, that is when the invoice is generated. Okay. Now there is a sanctity of the invoice document. It's an official document showing the tax for the transaction. Whatever tax is due, that is calculated based on invoices. Earlier, we used to have excise and VAT and sales tax. All of them, the point of calculation was the generation of the invoices. Now we have the GST calculation. When does a GST become due? GST becomes due when an invoice is generated. That is why invoice is a very important document, because it's a legal document for collection of taxes.
So what do you mean by GST due?
What do I mean by
GST due. GST due.
GST due? See, as per GST, rule says you are supposed to pay the GST once your invoice is raised. So let's say in the month of June, we have every day we are generating invoices. Today is 11th. In the last 11 days, we have generated 10 invoices. For all those 10 invoices, whether we have received the money from customer or not, the GST becomes payable by the company. So that's our GST due every month that has to be paid to the government. Okay.
Yeah. Good.
So when we are talking about receivables, we have two important things to remember. One is our invoice, the other is the receipts. Invoice document showing goods or services sold. So it could be goods or it could be service. For example, customer. That's
Saurabh, you're breaking. Your voice is breaking.
okay. I'm saying goods or services that are sold. Is it clear now?
Yeah.
So a company like IT service company, IT software company, moment they're selling some service, it's a tax. So the tax becomes due. Taxes are generated.
So this again get integrated from tax module. The tax comes from.
Yes, it will come from the tax module. Now, the other scenario that you could have here is we have documents that are showing goods sold. Customer can return some items also, correct?
Yes.
So for that, you will have customer returns.
So in that case, how tax are calculated? Because you already pay to the
Yes,
government.
correct, correct. So there is a option that you can choose whether you want to reverse the tax or not. Lot of times you will find when companies are saying that you can return the goods, they will say taxes paid are not cannot be refunded.
Correct.
They will not refund the tax. They will give
Correct.
you the cost of goods. Customer returns are entered as credit memo. Non-tax, I'll not say non-tax related, non-business related transactions can be entered as debit memo. So your direct business related ones are entered as invoices, whereas non business related is entered as debit memo. For example, any charges that you're billing to your customer, bank charges, check return charges, these can be entered in the system as a debit memo. So this, what happens, we are talking about credit memo and debit memo and invoices here. So from an Oracle perspective, they are calling it not invoices, they are calling it as transactions. So invoice is a doc showing goods or services sold. Taxes are generated as per tax setup. Customer returns are entered as credit memo. Non-business related dues, you can say, entered.
Saurabh, you're breaking.
What I said was transactions is a, is a term that we use for invoices, credit memo, debit memo.
Correct.
Invoice is for goods or services sold. Credit memo is for giving the customer credit for any items, any
Mm-hmm.
they might have returned or they may
Correct.
not have received. And debit memo is for non business related dues. For example, bank charges or freight charges sometimes, which you don't show in the invoice, but you may bill separately. Okay.
Okay.
And any amount received from the customer. Okay. Different statuses are unidentified, applied, unapplied, unidentified, applied, unapplied, and on account. Unidentified means we do not know who is the customer. Applied means you have applied it against a particular invoice. Unapplied means it is not against any invoice. You don't yet know which invoice to apply it against. Customer has paid, but he did not mention which invoice he is paying it against. And on account means it is like an advance. You're saying, okay, some invoices are becoming due. The customer has paid you to clear it. Okay. One can send remittance for clearance as well. Remittances mean that you have a standing instruction from a customer that you are going to that he is going to pay you every month. Let's take the case of your telecom providers, right? Geo or Airtel or Vodafone. You could have an uh, you know payment created which will automatically debit your account every month. So when the invoice is generated, the customer will send the company will send that particular invoice for collection. So we call it remittance. They will send the remittance for clearance. Once the bank says yes, the amount is cleared, it has left the customer's account and is now credited to your account, you will know that the remittance is successful. Okay. Now these are the two main things that we do against the in receivables. But there is a third entity which is the most critical entity, and that is your customer. So the customer is defined in is defined as a party. Will have account, sites, contacts. Each site will have a site use. Each customer must have bill to site.
Generally, what we do for the supplier same as for customer.
Yes, yes. A ship to site must be linked to bill. Okay. And for against this customer, we can have profile, class, category.
What are those?
Profile is like, or let's call it as profile class. Profile class is like, categorizing what kind of customer you have for giving him credit. For example, in case of the loans or the banking industry or the credit industry, they analyze how good, how trustworthy the customer is. Nowadays in India also they have started the credit score. In US it is very actively used. So anytime a check bounces or you don't honor a commitment, it takes a hit on your credit score, right? So
Correct.
people with good credit are find it easier to get loans. Let me put it that way. Similarly, here you can have a profile class for your customers. You can say, okay, what is the profile of this customer? You will say good. So maybe you will give him $10,000 of credit. His profile class could be medium, meaning he's not okay. Sometimes he has missed payments.
This will
So
also be maintained in the public website.
yes, you can,
True.
like, this is a categorization that we do and we link it to the customer.
No, no, just in India, for example, what I'm saying is we have a credit history, as you said, right? So every customer also undergo the credit history, something like that.
Yes. So this is an internal assessment that you're doing basically based on your ability to take the credit or to give credit to your customers. Lot of companies have a rule that if there is a order outstanding, I will not make I will not give another order. I will not release another order to the customer. First, the outstanding has to be cleared, then I will pay successive, I will pay further orders or I will send further goods. Some companies, they keep on extending their credit. Lot of companies don't do this kind of evaluation of their customers. Okay. So now, first thing we'll do is we'll go into the system, we'll look at the customer. password is changed. Right? Last night only I've used it.
We didn't receive any new password as well.
Last night only I have used the same password.
Mhm.
You must have changed it during the day. It's changed. Yeah. No, I don't have any email. Let me check. Okay. So while this we are getting something from him. Let's look at this. Oh, why am I going into receive? This is the receivables credit to cash.
Mhm.
Nothing relating to the customer. the credit profile, that what we were talking about, how they can review management tools. So they are performing credit checks on the customer and they're specifying different limits on the customer. Do you see this?
Yes.
So there are this this is one customer who has different entities. So the entities together they have a total credit limit of 50 million, and each customer can have multiple accounts.
This is for the credit limit of you're talking about for each customer.
Actually, this way, this is how the entire customer account can be maintained as well. So this limit that you're specifying, based on the limit, you can allow, disallow certain transactions for the customer. They haven't put a video for the customer part. So the total defined credit limit minus the open credit authorization minus receivables. That is the available credit. Anything that they are supposed to
Yeah,
pay.
it typically what apply for our credit cards.
Yes. It's creating the dispute. I haven't got a video for creating the employee, the customer, sorry. Let me just check with him about the password. 1 minute. Huh? He hasn't seen my message, so let me give him a call. Yeah, good morning. Password has again changed. Oh, oh. Yeah, he's sending, he's checking and sending. Okay, so we don't have anything. do something while we get that. Let's watch the video on the transactions. So that invoice that we were talking about,
Mm-hmm.
Anuj, you can hear me, right?
Yeah, I can hear you.
Okay. See if you can hear the sound here. Are you able to hear the sound?
No.
No, no. 1 minute. I'll have to reshare.
Hello, my name is Tanya. In this tutorial, I'll show you how to create a receivables invoice. Let's begin by navigating to the billing work area. And now let's create a receivables transaction. Note that the invoice transaction class appears by default. I'll enter the required general information. I'll start by selecting the transaction source and type. I'll search for my customer by name and select the customer's payment terms. Now let's enter the invoice line information. I'll enter a description, quantity, and the unit price. Our next step is to complete the invoice and then review the details. After reviewing the information, I'll confirm how the invoice will look when printed. Everything is in order, and I can now save the invoice. And the application confirms the new transaction number. We're done. Thank you. Hello, my name is Tanya. In this tutorial, I'll show you how to create a receivables invoice. Let's begin by navigating to the billing work area. And now let's
See, here they're calling it as transaction number.
Mm-hmm.
So every invoice, credit memo, debit memo is a transaction. So the transaction, it can be manual, it can be imported. For example, if you are using it with order management, once your orders are shipped, invoice is generated and through auto invoice, it can be brought into receivables. Or lot of companies have third party billing systems. If you look at a Airtel or a Vodafone, they usually use another software called as Keenan. Kinan is their billing software. From there, the invoices are generated and brought into receivables. Every month, whenever we have this postpaid billing, so those bills are brought in. Your broadband or your landline connections, those also require regular billing. So those billings are imported into. So the source can be manual when we are manually entering it, or it can be imported. And class is something which is defined by Oracle. You cannot create your own class, but you can create a transaction type using that class. Every transaction type is tied to a class.
So what are the different classes we have then?
Invoice, credit memo, then debit memo. These are your classes.
Okay.
And using this invoice class, you can call it something else. For example, customer does not pay. Okay, that can be, you can say bad debt, and you can raise a credit memo also, and it will wipe out the customer's outstanding. Behind the scene, the class will be credit memo.
Sorry,
But
say again.
sorry,
Say again.
what I'm saying, let's say customer has some dues. Lot of times you will find that uh, customer due was 5,100.
Correct.
Customer said, "Nee, nee, nee, yeah, you need to waive off this 100 rupee. I am not paying you 100 rupee." So he will pay you 5,000. That remaining 100 shows as outstanding in your account of the invoice.
Correct.
So what you can do, you can raise a credit memo called bad debt and remove and put a charge of 100 rupees in that credit memo and apply
Okay.
it to your invoice. So 5,100 invoice becomes 5,000.
Mm-hmm.
Got it?
Yeah.
So behind the scene, we have class. What we are defining is the transaction type. This transaction type is also important because the accounting of your invoices, accounting of the transactions is tied to your transaction type. There you have to mention what is your unearned account, what is your receivable account, what is your revenue account. All these accounts are mentioned on the transaction type, from where the accounting is derived. Okay.
Okay.
Create a receivables transaction. Note that the
Now see here, if you look at this is the transaction page and we are
Mm-hmm.
creating an invoice. This, whether it is invoice or credit memo, is driven by this class, which is automatically populated.
Okay.
Business
There we can
unit,
select whatever you want.
yes. Usually there are separate pages, but in case of invoice, debit memo, they are similar pages. Credit memo also has a separate page where you can apply it against a particular invoice. So business unit, we know this is the transaction source, manual or automatic imported. This is the transaction type I was telling you about. And transaction number is the numbering, date, accounting date, salesperson, you can tag it to the particular invoice. And this transaction total that you see, line total, tax total, this is automatically populated from the transaction that you are going to be entering here. The transaction is divided into, from a table perspective, three main levels. One, you have the header. This is your RA customer TRX lines. RA customer TRX all. This is the line. So RA customer TRX line all, and then you have the GL distributions. Your distribution RA, I think it's GL dist. RA customer TRX GL dist.
Invoice transaction class appears by default. I'll enter the required general information. I'll start by
If you see here, you can see the different sources.
Mm-hmm. This is a standard sources, or we can do a predefined sources.
You can also have, there are some predefined that come with the system, and you can also define your own as per your need.
start by selecting the transaction source and type.
These are all your types. As you can see, you have different types of invoices, which are, some of them are predefined, but you can define more as per your need.
Source and type. I'll search for my customer by name and select the customer's payment terms.
And payment terms is the date on which the customer is supposed to, by which date he is supposed to pay. You can also give him certain discounts and all that for encouraging early payments.
Now let's enter the invoice line information. I'll enter a description, quantity, and the unit price. Our next step is to complete the invoice and then review the details. After reviewing the information, I'll confirm how the invoice will look when printed. Everything is in order, and I can now save the invoice.
Now, one more thing.
And
Saurabh, just a minute.
Yeah.
In the previous screen, there was a payment terms, right?
Correct.
So see, the same thing will be defining in AP level also, right? Where supply will give the payment terms to us. So this payment terms is at the BU level or at the offering level?
These are two different payment terms.
Okay.
Both are at the business unit level.
Mm-hmm.
One is from the supplier, and here we are the supplier to the customer.
Yes.
So this is the AR billing terms. That was payables billing term.
Okay.
Payment term. Okay. Now for each customer, you will have a bill to site, and different you can have a different ship to site. Nowadays, this email and all this has come. Earlier, what used to happen, they would have shipping sent to one place. The official document has to be sent to the bill to site. Now people are using emails and they're emailing the invoice over. Even though hard copy is still expected to be sent. So where you send that hard copy is your bill to address. Okay, now Bhaskar has sent another instance. It's a new instance actually. So let's just log in and see that. So we go to receivables. And under billing, click on the tasks. You will have create customer. Okay.
Mm.
So once you click on create customer, so this is the name. Let's say SP customer, and each customer will have an account. So we can say head office account. Could be external or internal, or you can leave it blank. External means it's an external customer. This is the class. Class indicates these drop downs. Most of these drop downs are either you have some values which are extensible types. So you have some values which you can add more things as per your need, or you
Mm-hmm.
can have your own values. So let's say consumer, and then this is the address set that you can have. So this is your reference data set. Just call it. Site name, head office or main office. Give it an address. Your code. So you get your state, county, city populated, and then right at the bottom you have your customer address purpose. Okay. So if you add it here, the first one we create the bill to, then that bill to will have to link it to the ship to. Excuse me. If I now do a ship to here first, then it will ask me for a bill to also. At the point of entering the invoices, bill to is mandatory. So if you just define a ship to, it's not enough. So it's always a good idea. First define the bill to, save it. Then when you create the next one, that is ship to, you can link this bill to the ship to.
Okay.
So this is the bill to ship to I am creating, and I will get the bill to site here. Okay. If I have multiple addresses, I can define this as ship to, then create the new, or the first one I create as bill to. When I create the next address, I can have that as ship to and link it to a different address. Let's say we save and close this for now. Sometimes this address set creates an issue, so you create and then you can't find it at the time of entering your invoices. So it's primarily because of this reference data set issue. So we can back to the search page, so we can say SP and then we can do a search. So SP new customer has come up. Okay. So when I click on the name here, I get the details. Once I click here, I will get the other pieces at the bottom here. Account, and each account will have multiple sites. Suppose I want to create a new site. I will come here and create a new site. Let's say I call it site office, and I will say main street. This time I'll put a different address. And this address purpose would be there. So now see, if I make this as ship to, the bill to will be visible, which is the other bill to. This address is in California, whereas our bill to is in New York. Okay.
Okay.
Now, the final test of creating the customer is when you're entering your transactions. So when I create a transaction, I will be able to search for the bill to. Now each customer is tied at the business unit. So let's say this is this one, business unit. So if you choose your business unit, then this customer is visible. So our new customer is now visible here. So this is the bill to account. Okay, and then the corresponding ship to comes. In case I want to change it, I will get both the sides here. Okay.
Mm-hmm.
So for this particular bill to, I can have two different ship tos. So I can choose the one for which I'm going to be entering the, I need the ship. Got it?
Yeah. Saurabh, can we stop here? It's 9 o'clock.
Yes, we'll stop here. We are at a logical point. So today we saw the customer creation, how we
Mm-hmm.
created the customer and how we pulled it up in the invoice. We double
Okay.
check to see it's done properly.
Okay.
Okay,
Tomorrow, what time you want to have?
9 o'clock.
Okay.
Okay,
Yeah.
all right.
Thank you, sir.
See you tomorrow then. Bye.
Yeah. Have a good day. Bye.